Hey Mzansi and everyone connecting from elsewhere in the world. My name is Dawn Numdu, editor at Food for Mzansi, and it's really great to welcome you back to Food for Mzansi TV. I must say I'm really enjoying our engagements on this platform, and I found so much value in the information and business and financial advice that is being shared from our experts within the industry. I'm once again joined by Bertie Hamman, a Senior Manager for Agribusiness at Standard Bank. Hello, Bertie. It's great to have you with us and back on Food for Mzansi TV. How have you been?
Very well, thank you, Dawn. Hi to you and hi to all the viewers as well. Great to be here.
Now, Bertie, in our last engagement, we talked about the awkward B word, budgeting for success. And this week, we're focusing on understanding the difference between profit versus cash. This is, of course, a very critical factor when it comes to success, the success of farmers and success within any business. And you'll today take us through the relationship between profit versus cash flow and discuss some of the risk if either one of them, of the two, is unduly emphasized at an expense of the other. What does it mean, Bertie, to make a profit, and how does this compare to generating a positive cash flow?
Thank you, Dawn. Yes, indeed, it all starts with the budget. So if you make mistakes there, it will flow through into many of your other decisions. But then if we focus on profits and cash flows, I think, the whole concept of making a profit sounds very simple. To farm profitably, it sounds very simple. But then you get your financial statements from your accountant, and the results are puzzling. So perhaps you thought you made a loss, and the accountant comes back and he says, no, you made a profit, and you have to pay tax. And now who's to be believed? And I think, it's very likely that you and your accountant are perhaps looking at different things. I think it's very possible that your accountant is focusing on your profits, and you are focusing on your cash flow. Now, as we said in a previous period, in a previous episode, apologies, is that you will be incurring various expenses during a period of, let's say, 12 months. And based on the expenses, you will be generating an income as well. Now, if your income exceeds your expenses, you are making a profit. But that's just the simple way of looking at it. Your accountant will be using all kinds of accounting standards, which effectively means that you don't necessarily take into account all the money you received, or indeed all the money that you paid away. That is the accounting standards that you apply. And I think, in general, that is the reason why there's a difference between cash flow and profits. Because on the other hand, if you calculate your cash flow, you will simply say, this is all the payments I made, this is all the cash I received, and the difference between the two is your net cash flow for the period. And I think you can actually easily calculate your net cash flow by just simply taking your bank balance and adding the money that you've got in your wallet to it, and that is your net cash flow for this specific period of time until now. And I think that's why you will feel maybe a bit different when you get your numbers from the accountant, because perhaps you've just done that calculation and you now have less money than you had last year, and therefore you feel you made a loss. Well, like I say, the accountant's calculation is slightly different from that.
And is it possible for profit and cash flow to be the same?
Dawn, I think in theory it is indeed possible, but I think in the typical farming venture that's highly unlikely. I think if I can explain it, if you were, for example, a street vendor, then I think there's a good chance that your cash flow and your profit will be the same. Now, for profit and cash flow to be the same, there's going to be a couple of requirements. And if I can again simplify those requirements, it will mean that you will have to buy stock for cash and sell that same stock also for cash, right? Then you must not make any loans. And I think the value of your stock that you start with this morning and the value of your stock that you end with this afternoon must also be the same. And you mustn't use your cash to buy anything like a car or something else. Now, I think all the viewers will agree that in the typical farming venture, these assumptions are very unlikely to be achieved. So my view is that profit and cash flow is two different concepts which needs to be understood.
And Bertie, is it possible to record a profit but be cash flow negative?
Yeah, as strange as it may sound, Dawn, it is indeed possible. As we've just said, that cash flow and profits will most likely differ. And it can differ to the extreme that you can actually make a profit during your one financial period, and during the very same financial period, actually record a cash flow loss. Okay, and I think there's many things that can cause this, but maybe there's two aspects that specifically can cause cash flow and profits to differ. I think the first one is you make use of bank loans that have got a big influence on cash flow, and that can cause cash flow to differ from profits. And then the second thing is the timing when you buy your assets. If you buy your assets at a particular point in time, that can also cause your cash flow and profits to differ. If I can maybe, explain by one or two examples. If you take out a bank loan today, you get access to cash, right? That improves your cash flow. Now, from a profit point of view, the only expense you will be recording from that is the interest that you will be paying. So you can see the using of bank loans, for example, actually can improve your cash flow, I must say, over the immediate short term. So that is one thing that can cause it to differ. And maybe then another example, let's say your financial year runs from the 1st of March until the 28th of February. And on the 27th day of February, you decide to use all your cash to go and buy lots of stock, which you will be selling over the next couple of months. Now, that transaction will not influence your profitability. So on the 28th day of February, your last day of the financial year, you can still make a profit, but you will feel as if you are bankrupt because you used all your cash to go and buy stock. So the mere fact that you don't have cash on hand will make you feel that you're making a loss. While from an accounting point of view, that's not going to be true.
And Bertie, what is more important, profits or cash flow?
Dawn, I think, for the viewers, both are very important. In fact, generating a profit is normally the starting point to be cash flow positive as well. So if you cannot generate a profit, you will not be sustainable in the long run. So both are important. What you must try to do is to find a balance between generating a profit and be cash flow positive. And I think there's maybe two traps to look out for. Maybe your objective is to grow your farming venture very fast and as best you can. And there's nothing wrong with this ambition to grow. But in my experience, growth requires lots of cash. So if you grow too fast, you may run out of cash and not be able to pay your creditors. In fact, it is very possible to go insolvent, not because your liabilities exceed your assets. Maybe you are still solvent in that regard, but simply because you don't have cash to pay your creditors, you will go insolvent. I think that's the one trap to look out for. Growing too fast can eat up all your cash, and that creates a bit of an unfortunate financial situation. And on the other hand, you must remember, having cash, you can't generate money from high cash balances. So if you have got too much cash on hand, you may be losing out on business opportunities. So the benefit of cash is to provide liquidity, but not much else. So there's definitely a balance that needs to be found between generating a profit and be cash flow positive.
Okay. Thank you so much for joining us today, Bertie. I really enjoyed these sessions, and I'm sure that our farmers and agripreneurs are also really benefiting from them. We are looking forward to our next discussion, of course. Bertie Hamman, Senior Manager for Agribusiness at Standard Bank. We really enjoy this chat with you. And is there anything in closing that you'd like to add on this topic?
Dawn, I think, cash flow, very important. Generating a profit, also very important. If you are slightly confused between the two, go speak to your accountant. They are very qualified to explain the difference between the two for you.
Thank you so much for joining us this week, and we look forward to our next discussion, Bertie. It was great having you again on Food for Mzansi TV, and chat soon.
Thank you very much. Goodbye.